Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, please pay attention. Everything that we've been attempting to tell you all has been coming into fruition. Paying attention to economic data that is driving market sentiment and moving these markets. In today's video breakdown, we're going to be going over price action in the digital asset space on Bitcoin, HBAR, and ICP. Hopefully educating you all on what's set to come out over the next 24 hours, given inflation data on the forefront tomorrow. If you all enjoyed these video breakdowns and you learned something, please do us a favor, smash that thumbs up button and subscribe. Pay attention. I'm telling you all right now, we've been trying to give you guys the realest information in the game. If you guys go back and you watch this previous video breakdown on the YouTube platform that we put out just a couple of days ago, ICP crypto bull run will be huge, where we went to give our bearish targets on ICP of $11.50 way ahead of the curve. That bearish target was met to the absolute T of a degree, as you all can see, which we're going to get into in today's video breakdown. I'm going to go over price action, and since that video breakdown telling you guys way ahead of the curve that ICP was most likely going to tap into $11.50, ICP has returned over 16.5% since tapping into that significant psychological level. We're going to go over this price action in today's video breakdown, so make sure that you stick around to the very end. But let's first talk about what we are experiencing in the market now and what's set to come out in the next couple of trading sessions. So tomorrow in focus, we have the US core CPI inflation data set to come out with a slight decrease from previous ratings of 3.4% down to the forecasted rate of around 2.9%, inching closer towards the overall goal of the Federal Reserve, which is 2%. So why is this important to understand? Okay, first, we're going to just go over this tweet that I just put out to you guys, or post that I just put out to you guys. And I said, as risk asset investors, we want to see lower inflation readings tomorrow, weak US dollar, and rate cut expectations picking back up. Why? Understand why this is imperative as risk asset investors, and obviously, of course, how to react if the opposite happens. So if we see higher inflation readings, strong US dollar back on the table, risk off market sentiment, how you can react to that as a dollar cost averager or as a day trader. So I said, a low interest rate environment tends to benefit risk assets for several reasons, and rate cuts would prompt the narrative of a low interest rate environment. Firstly, lower interest rates makes it cheaper to borrow money, which encourages investment in both physical and financial assets, stimulating economic growth. Additionally, low interest rates lead to a search for higher yields, prompting investors to move from safer assets to more riskier ones in pursuit of higher returns, thus boosting the prices of riskier assets. Furthermore, low interest rates reduce the discount rate used to calculate the present value of future cash flows from risk assets, leading to higher asset valuations. And finally, low interest rates can increase consumer spending and business investment, further supporting the performance of risk assets. So in summary, a low interest rate environment benefits risk assets by stimulating investment, increasing asset valuations, and boosting consumer business and spending. I want to show you guys something, okay? Not a lot of people talk about this. Everybody talks about Bitcoin and how it was driven by the Bitcoin ETFs and whatnot, and the whole entire sentiment surrounding institutional adoption and blah, 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 blah. But I want to show you guys the correlation, okay? If we go back on Bitcoin to when Bitcoin bottomed out, roughly around June, July of 2022. Well, if we head over to the forexfactory.com, you guys can look at this chart yourselves. Okay, there's better charts that show these analytics, but this is just a free example you guys can go look at yourself. If we go look at the inflation chart for core CPI, okay, CPI year over year, and we click the little drop down menu that shows us the inflation data, and we go back to when inflation peaked out roughly around June, July of 2022. Okay, that's the same exact time that Bitcoin bottomed out. Do you think that that was a coincidence? No, it is not a coincidence, ladies and gentlemen. Okay, now if we head over to October, November of 2022, that is when inflation started to decrease, and the whole entire narrative that the Federal Reserve was going to pivot from their tight monetary policy stance started to come into fruition, which again drives the sentiment that we were potentially on the brink of heading into a lower interest rate environment. And I'm not making that up. Here you can see a Reuters article just as an example going back in time. Look at the date, November 11th, 2022. This is the first sign that we started to see from commentary from major fundamental articles like Bloomberg, Reuters, right, CNBC, all these people starting to put out articles of potential Fed pivot drawing closer, right? But the word has had its day. So this is when we started to see the Fed pivot narrative first start to come into fruition, which again created that sentiment that we were about to head into a lower interest rate environment. Now, remember, the banking institutions, they like to get ahead of the curve. They like to buy before the massive retail herd. They were buying up everybody's fear, knowing that eventually in 2023 or 2024, we were set to exit the tight monetary policy stance that weighed on risk assets, i.e., this whole entire bearish move I've covered in previous video breakdowns was due to what? Higher interest rates, i.e., the most highest interest rate hike cycle that the United States has ever been in, along with war, i.e., driving demand for safe haven assets like the US dollar at the very top of price. You guys can see November 2021 was the same exact time that we saw for the first time announcements from major article fundamental pieces like Bloomberg's and Reuters of Russian troops on the Ukrainian border, which also prompted a risk off market mood, driving strength for safe haven assets and whatnot like gold and the US dollar, coupled with a higher interest rate environment, i.e., rate hikes, aggressive rate hikes from central banks globally, prompted this risk off market mood. You can see in the fundamentals and in the data when this shifted. So when inflation started to come down in June and July of 2022, coupled with fundamental articles of potential pivots from major central banks, i.e., exiting their tight monetary policy stance, is the same exact time in correlation when risk assets like Bitcoin started to appreciate in value. Here you can see June, July, when Bitcoin bottomed out initially, roughly around 18 to 17,000, then coming back down in November when we see the first articles and mentions of Fed pivots come out, when Bitcoin really bottomed out roughly around 15,000. And we saw an uptick in risk assets and Bitcoin particular increasing in value. So I wanted to show you guys, this is why it's important to be paying attention to this stuff. What has been driving demand for risk assets over the past couple of months, pretty much since the end of 2023, heading into now, okay? It's been this narrative that the Federal Reserve is going to start cutting interest rates, right? So in order to continue that narrative, what do we need to see? We need to see lower inflation readings come out, i.e., looking at the sentiment in the forecast, previous readings of 3.4%, this would be positive for risk assets. We would most likely, if this data comes out lower than previous, below forecast would even be more significant, anything at like 2.8%, which I think that that's the minimum, the low minimum expectation, would most likely weigh on the strength of the US dollar and support a risk on sentiment. It would drive further the narrative that the Federal Reserve could potentially cut rates in early 2024, okay? Prompting a what? Again, reverting back to the post, a lower interest rate environment, which tends to benefit risk assets. That's why this, I know as a long-term investor, you don't really see this stuff in the short term because you're not day trading, okay? But as a long-term investor, this is what we want to see for a continued appreciation in risk assets, right? So I wrote down this little PDF for tomorrow, how to be reactive to this information and how to understand it, okay? So scrolling down here, this is a PDF given to the private CYPRX community members, but just real quick, focus on US CPI, all right? Going into detail as to what CPI is and breaking that down, but lower CPI readings and how that would affect the market tomorrow for intraday plays and the long-term perspective. If the core CPI tomorrow comes out lower than previous or shows signs of a decrease, it indicates that inflation pressures are easing. This can have several implications for the US dollar. Monetary policy implications. Lower inflation may lead the Federal Reserve to consider lower interest rates or delay raising them, as there is less pressure to combat inflation. That's what we would want to see as risk asset investors. Vice versa, as risk asset investors, what we don't want to see, if we do see, we can capitalize on seeking this information as discounted opportunities potentially on the rise, because elevated CPI or core CPI higher than previous, if it comes out elevated, suggests that inflation is picking up. This can lead to several actions by the central bank and affect the US dollar. Interest rate hikes. Higher inflation typically prompts the Federal Reserve to raise interest rates to prevent the economy from overheating. Higher interest rates can increase the return on US dollar denominated assets, making the US dollar more attractive to investors, which can strengthen the currency. So, if tomorrow we see these CPI figures come out higher than expected, most likely scenario is that we see an uptick in the strength of the US dollar, and we see a risk off market mood and a slight pullback in risk assets. I'm not sitting here saying that we're going to see a massive sell off, right? But we could potentially see The strength that we've recently seen in Bitcoin today, and I'm going to explain why that's happening from my personal opinion, potentially pull back. Now, if this data, which is forecasted to come out at 2.9%, does, most likely what we're going to see is the strength continue on risk assets and continued weakness in the dollar below 104.100, heading back down towards the low 103s. Now, why I think Bitcoin is and just did hit 50,000 is because the market algorithms are already pricing this in. They're already pricing in via the market forecast that inflation is going to come out at 2.9% below previous readings and in a slight decline. Okay. So again, what does that do? That tends to prompt a risk on market environment. So just to give a quick recap of why this bullish move happened, looking back from when inflation started to decline, when Fed pivot rumors started to come into fruition, you now know that a lower interest rate environment tends to benefit risk assets, meaning that if we see lower inflation readings, that then can benefit the overall risk market mood because it prompts the Federal Reserve not to rate hike any further and to potentially consider rate cuts, which then leads us into a lower interest rate environment, which again, reverting back to the post, tends to benefit risk assets. Hopefully that's not confusing anybody. This is how we've been able to build a crypto portfolio, why we've been so confident in our bullish positions, and why we've been buying the dip, or any single time that price decreases in value, we take advantage of that here at CYPRX and we buy price at a discount. Okay, so that now leads me over to the analysis on ICP and HBAR. Hopefully you guys are enjoying this video breakdown so far. If you are, make sure that you smash that thumbs up button, always attempting to keep you guys in the loop with the realest information to be paying attention to via market fundamentals. Now, please do us a favor, go back, just so that way you don't think we're making this up or tooting our own horn. We tried to explain all of this information to you guys way ahead of the curve. I even put this trade analysis publicly for the world to see on the X space. Now, you don't see a lot of influencers doing that. We do that here at CYPRX, not to give you guys financial advice or anything like that, but to show you all that by tracking fundamentals and paying attention to technical analysis, you can yourself tap into this. If you need a stable place, an educational platform that teaches you how we do it, we provide that here at CYPRX. You can do that by joining our monthly CYPRX platform, i.e. our Discord, or take initiative by joining our course mentorship, which provides over 80 hours of course in-depth material on how we do this here at CYPRX. But go back and watch this previous video breakdown. We called out bearish targets on ICP of $11.50, and we gave a full breakdown technical analysis as to why we were targeting these levels. Here is also the tweet publicly that I put out. You can see the date, February 4th, 2024. I said ICP potential targets of $11.50, alarms are set. I also put what would invalidate that thesis. However, looking at the charts now and going over price action real quick, you can see here is the post, okay? 12:05 a.m., February 4th, calling out $11.50 on ICP. Let's just go over utilizing the CYPRX strategy. We're going to stick to the higher time frame, i.e. the 2-hour charts, and go over why we were so confident in giving you guys this public analysis and how we were able to put our analysis on the line for the world to see with confidence backing it. Obviously, of course, aside from the macro environment, i.e. the market pricing in that the Federal Reserve was going to cut interest rates, prompting a risk on market mood, driving strength to risk assets, that aside, technical analysis was also playing a massive role, where you can see here's February 4th, where we called out the bearish targets to you guys of $11.50. What we were looking at is overall the trend on ICP, previous market structure was bullish, where you can clearly see higher highs, higher lows, higher high formations. Looking at this previous bullish leg, the day before we put the bullish sentiment out to you guys for a market retest and a move higher on ICP, you can see what we were doing. We were taking our Fibonacci from this higher low to the higher high, extending that over and looking to get in at a discounted price. I mentioned to you guys in this previous video breakdown that discounted price pulling back into roughly around the 79 to 80% sweet spot would be at around $11.50. Here at CYPRX, you can clearly see we don't buy at tops. We tend to put out valuable information to tell you guys discounted levels that we are looking to buy into on specific digital assets. Here you can see on February 4th, We were telling you guys $11.50. How we were generating that discounted area is just simply looking at previous bullish structure, i.e. this bullish move that cleared out all of this previous bearish structure, looking for a bullish continuation and to add in orders at a discounted price from at least 50% discount from this previous bullish move, which took us underneath roughly around $12.50, which I also mentioned to you guys were valuable targets in this previous video breakdown. However, $11.50 to the absolute T of a degree were met, and ICP significantly has increased since then. Now, if we want to see a continuation move on ICP coming and clearing out these previous highs here and these previous highs here, potentially revisiting $14 ranges or breaking higher, ideally what we would want to see is weakness in the dollar, risk on market mood, driven by lower inflation readings and the rate cut narrative staying on the table, i.e. the percentage of the market expectation that the Federal Reserve is going to cut rates increasing, right? We would want to see that scenario play out for further buy scenarios or momentum in digital assets like ICP and the entire cryptocurrency asset class across the board. That is if, let's type this out. This scenario would most likely play out if we see weak dollar, rate cut narrative back on table, driven by lower inflation readings. Okay. We could most likely see some type of scenario like this play out where we see continuation moves or maybe even potential retest of previous demand ranges here, here, here. Okay. And then a continuation move higher back into the high 13s, potentially breaking above the high 13s, heading towards the 14s. Okay. On ICP. That's what we're looking for, considering the fact that we were able to grab some dollar cost average positions at $11.50. Inversely, okay, let's talk about the downside and our targets on ICP for dollar cost average levels. If we see a stronger dollar, so let's say the inverse of this right here, which would be a strong dollar. So we'll go ahead and we'll clone this and we'll change some wording, right? So if we see strong dollar, that means dollar holding above, let's say, 104. Give me a second. 104.100. Heading back towards 104.6. We see the rate cut narrative fade off the table. So fade off the table, right? And then we see higher inflation readings. So this would be driven by higher inflation readings, right? That would prompt a risk off market mood. In a scenario like this, we would most likely see ICP start to correct this previous bullish move, breaking probably most likely back down the significant psychological level of roughly around $12.50, where then we could be looking for some discounted buying opportunities of anything below $12.50. I'll be looking for some dollar cost average positions on ICP, starting at $12.50, correcting some of this previous bullish move. Anything below $12.50, my next bearish targets, of course, will be $11 and maybe potentially 75 cents, tapping into some discounted areas, taking our fib from the low to the high of roughly around 75% discount from where this previous bullish move took place. That would put us at around, let's just say, $11.75. Okay, so $11.75. And then obviously, of course, anything lower than that. This stops us from buying tops, understanding market fundamentals and what could cause that potential pullback, or what could potentially cause an increase in the value of ICP or risk assets in general. So that way we're not chasing the market. Okay. So this is our overall ICP analysis. Remember, we gave you guys these bearish targets well in advance. How could you have used the CYPRX strategy? Fundamentals alongside technical analysis. Pretty much what we were giving you guys is that overall, when price was pulling back here, we saw that price was potentially set to come and tap into a discount from this previous bullish move, which it did. Nice buy positions called out on ICP. Heading into HBAR. HBAR, phenomenal call outs with inside our private CYPRX community, just to show you guys this information here. Okay. This is a message sent on January 31st, Wednesday at 7:17 a.m. you can see that this is where price action was on HBAR. If you correlate this with the charts, just to show you where price action was, okay, again, these are call outs that we give to our private CYPRX community via what it is that we are looking for in the market, okay? How our private CYPRX community decides to, interpret this information is entirely up to them. But if I show you, just highlighting on the charts where Wednesday, the 31st of January, price action was on HBAR, you can see here, this is when we sent the message out to the private CYPRX community, giving them our specific buy levels and dollar cost average areas on HBAR. From that significant psychological level, which if we zoom into the screenshot, here it is, we were looking at the 0.0707 and the 0.068 for buying opportunities on HBAR, okay? So if we measure from where this message was sent out to where price tapped into directly to the 0.068 psychological level, not only did we see an increase in ICP in our portfolio, but we also saw an increase in our dollar cost average positions on HBAR of roughly around 16.5%. Okay. So again, showing you all that not only on ICP did we give information out in advance, right? Before the move played out, here, this green circle is where we gave these bearish targets on ICP to the absolute T of a degree, right? I'm not sitting here, you guys and gals, tooting my own horn. I'm trying to show you all value, okay? And I hope that the people listening can see that we are providing value. We're not providing hopium. We're not telling you guys that ICP is going to go to $500 million. I'm not telling you guys that HBAR is going to go to freaking $10. No, we're showing you all how we properly build a dollar cost average portfolio by understanding chart analytics and fundamentals in collaboration with these institutionalized delta zones that our mentors here at CYPRX provide for the community, okay? So same thing that we saw on ICP. Why were we confident via just technical analysis, not even considering fundamentals? Why were we confident dollar cost averaging into these positions here on HBAR? Well, same principles that we just used on ICP. If we look at previous market structure, okay, here we can see the institutional pattern play out where we see a low in the market. We see a violation of that low via a liquidation event coming and clearing out any early buyers that existed beneath this low. And then we see buyers' interest pick back up, breaking previous bearish market structure. We're here in this bearish leg. You can see lower lows, lower highs, lower lows, lower highs. This is bearish market structure on the lower time frame. Well, buyers came back in and started to break that previous bearish market structure, where all of these higher highs, higher lows, and higher highs broke all of this previous bearish market structure. So now we have to see this as buyers are now back in control, outweighing bearish market structure or sellers in the market. Once we put out that analysis here in this area, price was simply doing what? Pulling back into a discount. So taking our Fibonacci from the low to the high, looking at where price was at a discounted range of roughly around our sweet spot, anywhere between 62 to 100% discount, price came back into roughly around 79% discount, which was that 0.68 psychological level sweet spot that we gave to the private community here well in advance on January 31st. Taking the initiative, exposing our capital, dollar cost averaging in at a discount from where previous banks bought from, you can see that significant increase that we had on HBAR. So now moving forward, again, same thing on ICP, same thing on Bitcoin, same thing with the rest of risk assets. If we want to see a continuation move higher on HBAR, potentially coming back above the 8-cent range, breaking into these potential highs up here and here, what do we want to see? Same thing, we want to see dollar weakness, lower inflation readings. We want to see the narrative that the Federal Reserve is going to cut interest rates sometime in early 2024 persist in the market. That's what we would want to see in order to see some price action like this on HBAR. Retest down here into these demand ranges, break above 8 cents, continuation move higher, above 8 cents into 9 cents. We would want to see weakness in the dollar, lower inflation readings, risk on market mood, right? Strength across risk assets all across the board, i.e. the narrative that the Federal Reserve is going to cut interest rates sometime in early 2024 persisting in the market. Inversely, tomorrow, if we see higher inflation readings, stronger US dollar, rate cut narrative and sentiment that the Federal Reserve is going to cut rates in early 2024 fading, most likely scenario is we stall out, at roughly around 8 cents to maybe 8.5 cents max on HBAR, tapping into this previous supply range here. And then we start to see a correction of this previous bullish move, potentially heading back down towards 7 cents, maybe breaking 7 cents depending on dollar strength and market optimism fading, i.e. risk off market mood, and a potential retest back down into these lows or this previous bullish move being corrected. Okay. This sentiment or this type of price action on HBAR would most likely be driven by higher inflation readings, stronger US dollar, risk off market mood, driven by the sentiment that the Federal Reserve is going to cut rates, fading, driven by higher inflation readings. All right. So these are the scenarios that we're looking for to play out, given the fact that we're going to be tracking this inflation data tomorrow. Hopefully this was a good video breakdown, gave you guys insightful information on how to pay attention to this stuff, how to correlate this with technical analysis, and how we've been giving you guys these price targets, not only publicly, where we expose our analysis to you guys to put our analysis on the line, which I don't see many influencers or individuals in this market space doing confidently and accurately. Okay. But we're also giving this information to our private CYPRX community well ahead of the curve, along with full fundamental breakdowns. So if you all enjoyed this video breakdown, do us a favor, smash that thumbs up button and subscribe. If you made it here so far and you're interested in any of the information that we provide to our private community, again, it is an educational platform that provides insights on how we build profitable portfolios here at CYPRX in crypto and in day trading, forex, commodities, and crypto assets. Many blessings to you guys. Again, if you want access to that, visit CYPRXtrading.com. You have two options to choose from: our monthly subscription program that you can join our Discord, have access to all this information on a monthly basis, cancel anytime, or gather a lifetime subscription program with a one-time fee and have access to over 80 hours of in-depth course material going into advanced detailistic perspectives onto how we approach the markets via fundamental, psychological, and technical analysis. Many blessings to you guys. As always, be constant, be aware out there, and I'll see you all in the next video breakdown.